Okay, I didn't know that. Good afternoon, everyone. I didn't know that talking about myself was going to be one of the things that I was supposed to do today. That's probably the bit that I'm not very good at doing, and is probably the bit that I'm going to do very, very little of in terms of the history. The simple thing is, I've been an investment banker for 30 years, worked in various continents, in Asia, in Switzerland. I lived in Switzerland for 7 years. I lived in Hong Kong for 6 years. And the rest of my time I spent working in the UK. I'm an Akokite. I went to University of Lagos. I went to Duke University. I'm a qualified accountant. There's a whole bunch of stuff that's written on there, but I tend to think that talking about oneself is grandiose and is not necessarily the kind of thing that, whatever I've done has been through the help of my community and with a bit of hard work and wanting to put things back. One of the things that I'm here to do today, I said, trying to work on the slide and we're trying to get technology to work, is to impart some of the knowledge about things that we've picked along the way. I know this is called Beyond Wealth in terms of what we're looking at doing, but it's always very nice when we sit in a room like this where we see people who have already achieved, and for you to be here already as itself, you've already done very well, right? And look at different ways and try and see if we can open different ways in your minds in terms of mindsets of making money. The previous speaker spoke about property. Most people understand property. Most people at least look at property in terms of ways, but in the more, what I would call the more sophisticated sometimes ways of making money or looking at things, you tend to see very few people from our community looking at them. And that's not necessarily because of a lack of desire, it's because of a lack of knowledge in terms of what is available and what is out there. So today I'm going to talk about socially responsible investing or social enterprise, or there's about 6 different ways you can call it. But we also want to look at the standardized ways of investing that we all think about and that we all look at. We've got a picture up there, so that's actually was going to be one of my first slides. That there is a charity which I'm a trustee of and a sponsor of, which we set up via my company when I used to. No, go on, you can do that. But it's a picture of young children in Cambodia. If anyone knows anything about Cambodia, for example, these were the guys where there was a war that was sponsored by Europe a few years ago, and people were massacred and killed, and a whole bunch of people under the Pol Pot regime, where people grew up without having families. In fact, the criteria for killing people in that point in time was if they wore glasses. So if you take just a snap poll in this room, anybody who is wearing glasses in this room, if you lived in Cambodia 25 years ago, you'd have been killed, right? Because you would have been regarded as an intellectual, and all intellectuals, regardless of anything. And I've been to the fields. And when you stand in the fields, when it rains, bones still come up. I've been there. I've talked to some of the survivors. So when you think that, most of the people here are probably of Nigerian heritage, but when you think of the evils that are done in Nigeria, the evils that have been done in other African countries, it's not unique. You look at other parts of the world, there's evil that's being done, or that has been done at various points everywhere, that is also then not necessarily reported in the Western press, as we would call it, the press that we actually know. So there's a lot of things that are going on. So when we talk about being... Okay. That's okay, I can, okay. When we talk about being socially responsible or wanting to give back, giving back is not just a case of doing the standard things like, giving £10 to charity or there are lots of different ways in which we can give back, especially to our community. So that there is a charity that I've been involved with for quite a while. It's something I'm extremely proud of, because what we do there is that we've built a school where we actually send kids to school who have no parents. They have no other way of going to school. They go to school through there, and then another part of the charity also then sponsors them through university, right? And then when these guys come out of university, what I've had done now is we've sponsored for a number of them to come to the UK. 2 of them come to the UK every year. And they then do work experience. They've worked in my company. When I was working at Crédit Agricole, they've come in and worked with us there. And they work with the French embassy. They do a whole bunch of different things. But the most enriching part of it is when they go and spend weekends or days in people's houses. And a quick anecdote before I go into the speech itself. The cohort who came to spend some time with us last year They came to spend time with my family. And on a Sunday after church, I take my kids we keep it real. So we go to a local greasy spoon and have some eggs and baked beans and everything in the first thing in the morning. And after that, I said, okay, I'll take them to a movie. So close to where I live, there's a 4DX cinema near Enfield, which has, I don't know if any of you have been to see the 4D cinemas. It's not just 3D with glasses, but you also have rain and wind and everything else, and the chairs move, and it's pretty exciting. So I took two of them, I took them there, and I said, and they were screaming and shouting during the movie. Went to see Avengers, something or the other. We came out, and we were in the car coming home, and I was looking at the expressions of wonderment on their faces, and I thought, oh, wow, I've done this. I said to them, wow, how's your first time in a 4D cinema? And the guy just looked at me and went, that was my first time in a cinema. Right? So the point there is they've never, ever been. And I felt so humbled because, in effect, I didn't even imagine it, that something as basic as going to a cinema. I didn't think. And therefore, that experience of going to a 4D was amazing. But they'd never been to a cinema, just in terms of that. And that's the kind of thing. So just as a bit of a disclaimer, because I'm an investment banker, nothing I say here, and I think Maya alluded to it when he was speaking, none of what we're saying here, unless you're licensed, is a solicitation for investment. No information here is intended as investment, tax, or legal advice. It's quite important that there is no assurance, and actually everything I'm saying here is true, and it is absolutely in your interest, but from a legal perspective, I've got to protect my derriere, so there's no assurance that any information herein is true, correct, or precise. And if you want to invest in anything off the back of this, before you go and put your money in anything, please don't say Anthony said so. Contact a registered, proper professional who will give you legal advice. Mayowa said it as well when he was up here, but please take that point. Now, when we talk about, thanks for that, when we talk about real net worth, right? When we look at where we are from a net worth perspective, everybody looks at net worth in terms of money. So we look at it in terms of, I look at it in other terms. Yes, we have the financial assets, so your cash, your stocks, your bonds, etc. We look at it in terms of the tangible assets, your food, your clothing, all of those things that you can see, the buildings, your car, your Mercedes, your bicycle, etc. But also part of your real net worth are the relationships that you have, the family, the culture, your friends, whoever you have on social media, your Instagram followers, etc., etc. Next slide, please. Because I'm conscious of the time, so we need to. So, talking about a number of these things, right? In terms of bonds, I'm hoping that most people here know what bonds are. But in terms of what bonds are a piece of paper that you can invest in, right? Which is normally, it's in effect, it's a loan. Whether it's a loan to a government or a loan to a corporate, it's a loan that has terms. So if you look at UK government bonds, for example, you lend the UK government money, right? They give you a 2% interest rate or 0.5% interest rate. It's as safe as houses, depending on the government that you're investing with. So obviously, when you look at, sorry, I'm holding this because I've damaged my knee, but just look, when you look at in terms of what bonds are a debt, and they're secured by assets. So if it's a country, it's secured by the assets of a country. If it's a corporate, it's secured by the assets of the corporate. You have varying qualities of bonds. So if it's a UK government bond, for example, it's rated AAA. If it's an Argentinian bond, it's probably rated as junk. If it's a Nigerian bond, I think they're rated as B something at the moment, right? But the rating reflects the risk that is in there of the government defaulting. So the UK government has never defaulted. The Argentinian government has defaulted about 4 times, right? But the difference there is then on the UK government bond that you invest in, and you can all invest in them, you get a little bit more than you would get than putting your money in the bank, but you get the yield on the lower quality bonds is a lot higher. So if you're going to invest in a Nigerian bond, for example, right now, if you do it through a firm called, I think AfriInvest, for example, they're offering some paper at 13.5%. Nice return if you can get it. If you compare that with a UK government bond, you'll probably be lucky to get 1.5% in terms of the return. However, the chances of a default on a Nigerian government bond is deemed to be higher than that of a UK government bond. The great thing about bonds is that they're liquid, so you can sell whenever you want to. There's always a market for them. So if you need money because your cat died or your dog is pregnant, you can do that straight away. You can realize it. It's not as illiquid as a property, for example. And the price of the bond goes up and down inversely with interest rates. Stocks you all know about, stocks, shares or equity, it's ownership in a company. Yeah. Yes. Now, what you have as well, which you can invest in, is you can invest in what is called mutual funds. So where you have a risk profile which you'd like to meld, where you want a little bit of this and a little bit of that, you want some Argentinian risk, but you want to have part of it in the UK, you want to take some risk that's got exposure to fintech, you want some exposure to property, etc. You can get a basket of securities, right? And there are various exchange-traded funds, ETFs, that put these things together depending on what you actually want to invest in. And there's something for everyone. And the rates, or the yield that is available to you, it varies depending on the fund. Now, these are the kind of things that if you have a pension, which, seeing that most people here either have gray hair or have dyed gray hair, or don't have gray hair at all, but most people here would have in their pension funds, for example, this is what your pension funds tend to put money into. Now, I was speaking at an event last week, and I asked the people in the room how many people knew what the value of their pension fund was, because most of the people in the room were around 50. And not one single person. There were 62 people in the room who were 50 and over. They're all here in the UK, and not one single person knew what their pension pot was. And they were all employees. So it's something that should be looked at, because your pension fund as well, when you look at investing, is something that you can either take money out of to invest in something else, but it's also what's going to pay for your retirement. And it's yours, by the way. Okay, so we talked about model portfolios of varying risk. Again, you can do, depending on what you are as a person. If you're conservative, you put most of your money in fixed income. If you're aggressive, you put a lot of your money in large cap equities that have a lot of risk. So you invest in things that are new, you invest in the Revoluts of this world, you invest in things that can go up and go down, but you have a higher return. The point I'm trying to make out here is you don't have to be a risky person to take out, to invest in portfolios. You also don't have to think, oh, well, I can't get any money out of these because I can only make 1%. Right? There are various funds that have a track record of producing up to between 16 to 20%. Sometimes you can even have capital guaranteed on some of them. But they're out there. But people need to know about them, because as an alternative, one of the things, for example, as an alternative to investing in property or investing in things that require high capital input originally, is if you have £1,000, you can invest in some of these things. Right? It's a lot better than just putting £1,000 sitting in your bank account, whereas right now, 90% of bank accounts pay nothing. Actually, all your current accounts pay zero for your money sitting there, right? So it's pointless. It's pointless having 100 grand in the bank and sitting there and watching it every morning when you wake up. Next slide, please. Okay, so other investments. We've talked about property. People talk about vehicles. People talk about technology. I put vehicles up there because, again, most people laugh when you think of vehicle, because most of the time you think it's something that depreciates. But actually, if you invest in vintage vehicles or unique vehicles, the prices of those, in terms of, they go up even better than property. If you invest in a 1962 Cadillac that was ridden by Elvis Presley, for example, or something like that, right? You buy it at £20,000 on eBay, which you can do, right? You do what Maya was talking about, is you put some money into it, right? Maybe £10,000 to refurbish it. You can sell that for up to 300, 400,000, right? But you've got to do the work in terms of finding it. So, when we look at all the standardized investments, right, what else is there, right? And this is what brings us into what I'm quite keen on looking at in terms of where we are as a market. One of the reasons why everyone's here is we all have this intention to want to do good. We want to do something that makes us feel nice, warm, and fuzzy, right? One of the things is most people don't know about the social impact investment market. And the social impact investment market is currently, it has over 502 billion. It's grown from nothing in the last 20 years to where it's, as of 2018, it's 502 billion in terms of the size of that market. And it's growing. With everyone coming up with the save the whales and the sustainability and getting rid of the paper bags or bags in your shops and stuff like that, and the environmental conscience that we're all growing. This is an area which is becoming more and more important in terms of what the investment is. And it's not just the fuzzy do-gooders that are investing in this. It's also where real money is being made. So, what's social impact investment? SRI, as the name is, there are multiple definitions. Some people call it socially responsible investing. Some people call it sustainable and responsible investing. Blah, de, blah, de, blah. You have sustainable, responsible impact investing. Generally, what it is, it's an investment that generates a measurable, beneficial, social, and environmental impact alongside a financial return. So you're making money by doing good, is in effect what it does. And that bit there is the bit that's actually quite important. The bit there that says it generates a social impact alongside the financial return. Now, investments can be made into companies, they can be made into organizations or funds, whether they're for profit or not for profit. And a lot of the social guys that are out there that are actually doing good are actually out there doing stuff for profit, right? And they can finance social services and social infrastructure. So, now, why is it important? As I've mentioned before, it's a shift in terms of where the world is going, right? So over the last 20 years, we've seen a shift towards service provision and service outcomes. So everyone's looking at how can we treat people better? How can we do better things in terms of the world? If you look at the NHS, it's all about now how are you doing stuff in terms of having you have patient satisfaction. If you look at even in my business in terms of financial services, customer satisfaction, which we never used to care about before, is now the most important thing. What is the stickability of a customer? Are our customers happy? The other important thing about social investment is that it makes you feel good. So if you're invested in something that gives you a 10% return, you're making money. But you've also built a road in Myanmar, or you've built a road in Kenya, or you've actually repaired a bridge in Lagos or something, right? Or you've stopped flooding in Lekki. Or there are lots of things that you can do that have a huge importance. Even if you look at it in terms of if you're into saving animals, you do it Save the Rhinos Trust in South Africa. It does something that is extremely good. A lot of governments, sorry, can we go back there, sorry. A lot of governments also recognize it in terms of the fact that external knowledge and the private investment is actually needed because people can't afford it. And we have the Oba of Etioni here today, who we've been discussing this kind of thing with. It's not where you can't do these things on your own. Sometimes the governments don't have enough money. There isn't enough allocation. By the time you go down from federal government to state government to local government to looking at the community in itself, things cannot necessarily filter all the way down. Or if they do filter all the way down, it takes too much time. So the private sector is also needed in terms of looking at those kind of things. And that's where it also becomes quite important. But obviously the private sector wants a return. So you can do good, but you can also get a return on that. And also, when you harness the innovation and capital of all sectors, the private sector, the government sector normally is quite bureaucratic because it's government. So when you bring in the private sector, it helps the development and it helps the outcomes if properly managed. Now, when we put the private sector into the NHS, and I'll say this because Monica's here, what they did is they just took all the money out of the NHS and they didn't deliver anything. But that's a different thing in terms of the IT stuff that was done there. Next slide, please. Talked about this, benefits of value for money, contestability, transfer of risk, cross-portfolio approach. I won't go into a lot of that detail because it's too dry for here. But what is important, and this slide here is one of the ones that I actually really like. Now, normally when you're showing stuff as an investment manager, you normally show slides that actually back up your purpose, right? So you never go and show a slide that shows that things are not performing properly. But what this shows you here, the blue slide is an investment called the Betterment Portfolio, which is a fund that only invests in socially responsible ventures. When you compare it to the red slide, which is the All International Stocks Index, it shows that it outperforms it. When you look at just all US stocks over a period, you can see that it's tracking it extremely closely. It might underperform it, but what you're having here is it's showing that right in the middle of there, you're doing better than the average of the whole world in terms of what you're looking at. Okay, you're doing less than certain specific areas, but what it's showing is that the return is still there and it can be done to actually, it's a reasonable and sensible kind of thing. Next slide, please. So, who are the players in this, right? You have the supply chain. So people who provide finance, they can range from financial institutions, people who work with people like myself, super funds and trusts. You need sorry. You need you can't just create these things out of a PowerPoint. So you can't just create them so you need intermediaries. The intermediaries are people like you, right? One of the intermediaries that I put out here, for example, one of the intermediaries is sitting here, for example, right? Where you reach out, somebody has to do the work of developing the common ground. Somebody has to have the idea of what is the social venture. Somebody has to have the vision, right? So you need visions like that, and then obviously you need demand suppliers. So who are the people who want to get into this kind of area? Where does it work the best? We've spoken a lot about property, but it works very well in property, especially not necessarily in the UK, but in areas that actually need it, right? It works very well in health. It works very much in employment, education, and training. And that's what I started with when I looked at the stuff that we're doing in Cambodia, because it's basically how do you train people? Because the way to get out of poverty in the first place is by educating people, right? And early education. In most of the impoverished areas in the world, the biggest problem is that because people are hustling so much to make money, because everybody's trying to get food on the table, what is sacrificed at that stage is education. You can't feed your kids, you're worrying about teaching them ABC. It doesn't work, first of all, the first thing you're trying to do is to feed them. Okay. The path. We need to be able to provide an environment to deliver more social impact investment transactions. So one of the reasons in terms of when we look at this beyond wealth thing here, so we're looking at different ways of looking at things. It's not just about generating the wealth. It's okay. When you're thinking about how do I generate wealth? You can also generate wealth by trying to do something good, right? So most of you, a lot of people have connections with Nigeria. I can give you examples. Again, I'm taking Obadokun's example, but it's only one, right? You want to look at what we're doing with cocoa in Nigeria, right? You want to create a better market. You want to globalize it. It has an impact on the community of it that you need to look at. Okay, I see the signals, but I need to, you did tell me 45 minutes, so, right? So, okay, let's go past that one. Okay, in terms of the ESG screening, in this country at least, in order for everyone to make sure that their money isn't being swallowed by kangaroo establishments, there is a real screening that needs to be done. And that's set up by the government, and there are laws and legislations and regulations that actually cover that. And that most of you who work with charities will know all of that stuff. You can't just take somebody's money and go and disappear and spend it. The Sodgers, who used to be footballers in this country, tried to do that. And they collected about, a couple of million as a result, and went to spend it on themselves, and they're in jail as a result. So now, in terms of when you're looking at these kind of areas, most of the things that we're looking at when you create these kind of enterprises, they normally avoid, if you want to get all the benefits as well from the government in terms of the tax rebates then you have to make sure that it doesn't include a number of these things. So alcohol, tobacco, pornography, wow, okay, polluters, poor labor and human rights, a whole bunch of things that we all want to look at. What are the positive things? So nowadays everyone's into health, all those kind of things. But they're obviously the pretty obvious things that we're actually looking at that are the positive screens in terms of the things that you can do. Community investing, again, we'll make the slides available so you can look at that in detail. There's loads of those. There's impact investing, go on. Again, all of the entities that you know, a lot of the big companies that you know, all are participating in this because, quite frankly, all of your shareholders are demanding this at the moment, right? Let's go to the next one. Now, this is a slide that it's quite important, but we won't be able to see it on here. This is an impact investment that was actually done in Nigeria before that was sold to, there was a company that was set up, and it's not got the actual name in here, but there was a company that set up to start the mobile phone industry and make sure that we could actually do stuff in the rural areas. That fund probably cost about, I think it was about 6 million in total that was invested into this by various people. It was sold to MTN in Nigeria for 200 million, right? When they bought it and consolidated it. So think about it, 6 million to 200 million. Next, no. Okay, we've talked about these. In terms of the three main forms, so going back to what we said about bonds, there's social impact bonds. You can look at them, you can buy them. There's social enterprise in itself, which again is the easiest thing to get because that's the thing you can get your hands dirty in. And then there's social impact investment funds, which are a collection of funds, which you could say to your fund manager, for example, I want to invest, as part of my pension, I want to invest in that. Okay, professional advice. I mean, these are the three kind of people that you need to look at. It's quite important, and we talk about brokers, we talk about investment advisors. It's quite important that most of us here look at financial planning. And we're going to get into a point where we talk about strategy today, but it's quite important because lots of people go in and jump in and invest in the last good thing they heard about. But planning is absolutely strategic, and it's actually important. So, we've talked about different kinds of investments. We've talked about social impact investments, social investments in themselves. We've talked about the performance of all of those very, very quickly, unfortunately. We've talked about who provides the advice. So, going back to what Monica was saying in terms of when she wrote it down, it is absolutely important that when you've got an action, when you start developing an action plan, so based on all of the things you do here today, right? I don't want to sound like I'm on London Underground, which is see it, say it, whatever it is, but actually see it, say it, write it, and bloody do it. Because one of the things we're all great about is procrastinating. We see it, and we say it, and we go, oh yeah, great idea, I'm going to buy it, and then we wait because we want to. And we don't have a strategy because, hey, black people don't do strategies. Sorry, that's very politically good. No, but I'm saying it but we need to have strategies. We need to have plans. We need to be able to enact these plans. And then, when we do it, just because it doesn't work the first time doesn't mean it's failed. You review it, and the cycle continues, and it continues, and it continues. And that's how you get beyond wealth. That's how you generate actual wealth, and that's how you actually do good. Thank you very much.
What a day it's been. How amazing has it been? I'm tired, but at the same time excited at the possibilities. It's gone so well, better than I expected, and everyone is really engaged. Everyone was engaged and wanting to take the next action. So now I'm looking forward to evaluating the event because it's important to always learn from how things have gone and to improve it for next year. So I'm looking forward to welcoming you next year and for you to just join in and let's live beyond wealth and let's give back and make the lives of other people better as well.